Hello learners, welcome back to our next session whereby we were discussing, whereby last time we were covering tax planning, and today I would like us to continue with evaluation of remuneration package. Remember in the previous session we covered tax planning for individuals and also how to mitigate the impact of direct and indirect taxes. So let's start approach this particular area. So that is evaluation of remuneration package. Evaluation of remuneration package. Evaluation of remuneration package. In this particular subtopic, we need to understand how to evaluate a job offer. This is because there are some cases whereby somebody can get two job offers at the same time and can be in a dilemma on which job offer to accept. Or somebody can get employment, and in this particular employment you find that you are given some alternatives. You are given of alternative 1 and alternative 2. These alternatives will be in form of benefits. Like the employer can tell you, you can take school fees benefit or you take a car benefit. So in such cases whereby we have alternatives, so it is important to understand or to equip ourselves with the knowledge of evaluating such offers. In order for us to handle this area in deep, we need to understand some steps that can help us to come up to the best conclusion of this particular field. So let me highlight some of the steps that are very, very important in evaluation of a job offer or remuneration package. It's also known as job offer. Job offer. Step number 1 will be calculation of taxable employment income. Calculation of taxable employment income. So the amount that we need to tax, and it should be for each offer or alternative. So remember, we are having two offers and we want to pick the best, or we have alternative 1 or alternative 2 and we want to select the best alternative. So the first step will be calculation of taxable employment income for each offer or for each alternative. Then the second step will be calculation of gross and net tax liability, and this is gross and net tax liability again for each offer. Then number 3, now we need to calculate at the third step, that is income, calculation of income after tax, calculation of income after tax or income after tax. And income after tax will be, we get this taxable employment income, we subtract the gross and net tax liability, we get again income after tax. Then number 4, we calculate, we earned non-taxable, or we earned non-taxable benefit, because when we were calculating this, we were only considering the taxable items. Especially in this note, we only included those incomes which are taxable, and therefore if we have an income that is taken home 100%, that is without tax, it should be added. Then when you add that, number 5, you get disposable income. And this disposable income, it is income to take home. Income to take home. And you are supposed to make decision based on disposable income or income to take home. So number 6, it will be conclusion or advice. In other words, you advise that particular client on which job offer to accept, or you advise him to maybe to accept the offer but consider certain alternatives. So this will be the last step. And in order for us to understand this now practically, I would like us to consider a question so that at least we see how we can evaluate the remuneration package. The question that we are going to consider reads like this. Violent Ouma has been offered a job with Apple Electronics Kenya Limited, a foreign company dealing with the distribution of smartphones and computers in East Africa region. She is due to report on 1st January, that is 2019. Her terms of employment provide the following emoluments. She would get a basic salary of 450,000 per month effective from 1st January 2019. The company would make the following additional payments to her per month. Home to office car allowance of 28,500. She would be given the option of using a company car. The car that would be allocated to her would be of 2500 cc, which the company would purchase at a cost of 3.5 million. Bullet 2, house allowance of 8,000 per month. However, the company gives her the option of moving to a company house from the commencement of her emolument. The house would be rented by the company at 8,000 per month. She would, like all other employees, enjoy the company pension scheme, into which the company would pay 25,000 monthly for her benefit. She would also have to contribute a similar amount into the scheme. Number 4, and an end of year bonus amounting to 35,500 would be paid to her each year. She, however, would be given the option of taking a gift of a smartphone from the company worth the same amount. She would be eligible to be included into the company attractive medical scheme, which only covers management staff. The amount of the benefit is capped at 1.5 million per year. She, however, has the option of free for all claim-based medical scheme operated by the employer. The scheme is capped at 1 million per year. For 12 marks, recommend the best option for Violent Ouma based on the above information. Now, considering that particular question for Auma, one thing that to note is we have only one job offer. But this job offer is having alternatives, and therefore we need to do the evaluation of this particular job offer. We consider the two alternatives, and by the end of the day, we advise Violent Auma on which job offer now to, on which alternative he need to accept. And therefore we can give the solution as follows. As follows.